Right. Interesting article just about to come on TV. Just after this, a little bit. Sorry for being a bit jerky. I'll just turn it up just a little bit for you.
So later today we'll be hearing from Fortescue Metals CEO Nev Power. He is the head of Australia's largest pure iron ore play. Elsewhere around the market, ASX futures up 0.2%, so looking positive there. Nikkei futures also up as we wait on earnings from Tokyo Marine and Olympus, and also the balance of payments for June out of Japan also expected, and China trade. So a busy day here. I'm Paul Allen in Kalgoorlie.
Right, now this next bit is very, very interesting. Also, those share prices too. Here we come.
This is Bloomberg Technology. I'm Emily Chang. Back to our top story. SoftBank and its global ambition to become a major tech deal maker. In an announcement after earnings were reported on Monday, Masayoshi Son confirmed his interest in the U.S. ride-hailing market. Take a listen.
We are interested in discussing with Uber. We are also interested in discussing with Lyft. We have not decided which way, but the US is a very big market. It's the most important market. So we are definitely very much interested in the US market.
SoftBank already backs China's Didi Chuxing, India's Ola, and Grab in Southeast Asia. Joining me now to discuss, Bloomberg's Caroline Hyde out in London, and with us here in the studio, Technalysis Research President and guest host for the hour, Bob O'Donnell. So, Bob, let's start with you. Look, ambitious as ever, yet he's already made investments in all of these other ride-hailing companies. There was talk he might be trying to create some sort of anti-Uber alliance. Then we heard he was interested in getting Uber shares. What do you make of this?
Well, two things. First of all, he's doing his deal-making in public, so he's trying to prove himself to be this master dealman. And again, he's trying to build these core technology pieces. And the interesting piece that he wants to deal with is the notion of autonomous driving, which we believe is primarily going to affect fleets like these car companies, car sharing companies. So if he can develop some technology and then leverage it across all of the different ride-sharing companies, he has a big opportunity to influence that market in a much bigger way than a lot of people may realize at first.
So, Caroline, we had reported that SoftBank was interested in potentially acquiring secondary shares of Uber. Then there were reports that deal was not happening. What do we know about the status of SoftBank's actual, investment or talks about investing in these two companies?
And it was so convoluted because we had understood that it was going to be Uber. He was initially after, you said it, he wanted in, perhaps buying from the secondary market. The likes of Benchmark Capital, which is one of the first investors in Uber, was said to be one of the driving forces behind perhaps selling some of its stake into SoftBank. Then SoftBank potentially also wanted to get in at the $70 billion valuation of Uber with those seats on the board. Then that all seemed to fizzle out. Reports around the market seem to show now it's a Lyft and an Uber race. As he says, he hasn't decided. What different companies, though? Lyft, the last time it raised money was about $7 billion valuation, and we know that Uber is about 10 times that. And what's so interesting is on both parts, he's going to be getting into bed with either companies in his portfolio already, because Didi Chuxing, the Chinese company that he backs, is an investor in Lyft. Meanwhile, Uber's one of prime investors is actually someone who's backing his enormous Vision Fund, the $100 billion or almost thereabout Vision Fund, that being, of course, the likes of a big wealth fund backed by Saudi Arabia. So it's interesting as to which mark he takes, but I do think it's notable that he says he wants to be the world's most valuable company, that being SoftBank, and he wants to have the biggest investment portfolio in technology, and he's got to get in to autonomous vehicles and ride sharing. In particular, he didn't really speak about the autonomous element of things. Have a listen.
I think the way people use the transportation and the lifestyle will be different from today, 30 years later, 50 years later, it will be very different. Autonomous car is definitely coming,
Yeah.
and when that stage comes, this rideshare business becomes even more important.
He's gonna back any horse it seems to win, Emily.
All right, Caroline. So, Bob, it's interesting. I wonder if this sets off now a race between Uber and Lyft, because in this, neither of them are public companies. They need more funding to continue to grow and compete with each other,
Right.
as well as compete globally. Does this set off, an increased competition between the two of them when it comes to potentially billions of dollars?
Well, I think it does. I mean, clearly my guess is he wanted to go with Uber, and that's why he was placing all his bets there. But given all the challenges they've had, I think he's realized that, maybe there is this interesting opportunity, and he can do something to drive Lyft forward and still play a role. Again, his view is long-term. He wants to see who can drive this autonomous vehicle technology and then share that across other ride-sharing companies. And, oh, by the way, leverage the semiconductor companies like NVIDIA and ARM and all these other companies that he already owns a piece of, and build that into this bigger vision. Again, around the Vision Fund, is leveraging the Vision Fund as well.
All right, Bob O'Donnell, we will keep a close eye on all of Masayoshi Son's deal making. You are sticking with me. Bloomberg's Caroline Hyde out with us in London. Caroline, as always, thank you. Now, sticking with SoftBank, the Japanese giant acquired ARM Holdings just last year.
Wow, that's a mind
The
blower.
company posted a quarterly loss due to an increase in headcount, compensation, and a one-time acquisition charge. Net sales for the past quarter reached $428 million, up from $409 million the previous quarter. The results included a $120 million in expenses recorded following the acquisition. Coming up, WeWork expanding again.